switch up. I said, okay, my infatuation it translating to another form of what you call it.
What is going on, viewers? My name is Chuck Butler, and you are tuning into Friday Recap. Oh yeah, that's right. We go over what happened with my trades during the week. I'm gonna go over them and view them, and the reason I'm doing this is for you guys to find any value, to see if you can either learn my mistakes or learn my success and see what you can do to either replicate it or stay away from it and make yourselves profit, because that's what I'm here for. I'm here to make money, and I'm here to make you money. So pay attention, listen up. It's been an okay week. It's been okay. I am up 3.4% on the week. My account is now totaling at 1,034. I have taken 4 trades. Out of the 3, I'm trying to stay around and take. And I'm gonna go ahead and show you the trades that I took for this week. We got ticker symbol TUSK, ticker symbol Gush, ticker symbol AA, and ticker symbol BBY. Tusk was taken on Monday and sold on Monday for a day trade. AA was bought on Wednesday and sold on Thursday for a swing trade. BBY was bought on Thursday and sold on Friday for a swing. I wanted to stay in that for longer, but I'm gonna go ahead. Actually, it's right here in front of us right now. I'll go ahead and get into that for the last one, because that one is the juicy one that I won on. And AA was like I said, bought on Wednesday. Okay, no, Gush. Gush was bought and sold on Friday for a day trade, because as I told you guys in my previous videos, I found a specific pattern with certain inverse leverage 3 times ETFs in the week. If you day trade them and you're patient enough on the day, they're able to cover about 3 to 4%, which is what I'm looking for in each trade I take, about 3 to 4%. So I would like to take 3 of those trades every weekend, profit about 7% or more, depending on how the week goes. But yeah, let's go ahead and get into it. First one on the list is ticker symbol TUSK. Do not give me shit on this one. I understand that it was on a downward trending pattern, but as you can see here, on this one, this is a special case. I tried out a new strategy for this one, but I did not go through with the strategy completely. The strategy is called Bounce Man, and that's where you buy literally at the support that you have identified, but you only buy in half of your shares just in case it decides to go the wrong direction. And as you can see, it went the wrong direction. But I made a mistake. I bought in at 30 when I realistically should have bought in at 20, when I realistically should have bought in at 29. I really don't understand here. Let me go to the 1 hour chart. As you can see, it is obviously on a downward trending pattern. But oh no, the reason I took a position onto this is because, as you can see on previous patterns, as soon as it crossed 30, it just spiked up here, 30, and it just spiked up right here. And I plan to sell it around 31 for a total profit of 3.3%, and that would have worked. No. I know. I know I botched. The trade. You see, I bought here. I bought on Monday, around the morning time, and as you can see, this it bounced from the support at 29 3 times this week. One right here, and then here. But as you can see, it didn't complete its pattern or retrace back up to its resistance at the resistance I identified at 34 and 36 here. Let me, John. I'm not going to trade this one again. I'm just showing you the resistance lines that I see. Then there's another one at 32. It didn't even complete its pattern to 32. That's what I'm trying to get to you guys. That's what I'm trying to knock at you guys. Oh, sorry. I usually look for horizontal patterns on the 15-minute time frame, 30-minute time frame, or the hour time frame. But yes, as you can see, the bounce man, the plan would have worked twice actually, but I got in again at 30, expecting what to had happened previously with this certain ticker. But realistically, I should have got in when I said I was gonna get in at 29, bought in half my position, and look, sold at 30, about 3%. I would have won on this if I didn't buy it, if I actually bought in at the validated support, but I did not. So there goes that trade. Lesson for this one: if you're going to buy at the horizontal, if you're going to trade a horizontal pattern and buy at the support, make sure you buy at the support. This one was a very beginner's mistake, and not the best one. So moving on. Now we have ticker symbol AA. As you can see, I had taken a position on this one on Wednesday for the intention of a swing trade. My entry was at 45.18 with 11 shares at 12 p.m. Around right here, around 12 p.m. 44 was at 44.18. Yeah, around right here, buying in at the top, like Chuck, like I'm good at. You never want to buy at the top. And as you can see, I sold on Thursday. I exited my position at 44.55 at the same time around 12, and I lost a total of 1.39% on this one. Let's see, let's go back to the 4-hour chart. I did break this one down for the Sunday stock talk. As you can see right here. Yeah, let me go to 4-hour chart. This was all big and boldy. What the? Okay, entry at 44 to 50 offers 13%. Stop loss at 43.90. Entry at 44. Exit at 45.35. Oh my! Did I really? Hold up! Oh God, you guys are gonna hate me for this. Oh my God! It literally completed. Oh wow! What? Okay. Okay, so for this one, oh my God. You see, I can break things down. Entry at 44, exit at 45.35, and that was the resistance. Oh wow. Oh my, yes. Okay, I have failed. Ew. Alright, yep. Quitting the YouTube channel. Okay. See you guys. Sight. Nope, I'm back. Okay, yes. So as you can see, I clearly identified the breakout point, the resistance at 44, and the resistance around 45.50. Realistically, if I wanted to get on this one for a swing, not only should I have bought at 44 because it was already trending above let's see, let's go with the 4-hour chart. It was already trending above the 4-day EMA, and as you can see, it validated resistance over here at 46. But the reason I was hesitant on getting in on this is because I was following the SMA line. As you can see, it previously got rejected around here, and then as the gap was thinning, I was like, okay, it's going to do one or two things here because it's wedging. It's either going to break down or it's going to break up. And as you can see, I got in right here on Wednesday because it broke above. That's why I got in. But I realistically should have stuck to my plan and got in at 44 because I would have sold. I would have sold the same day. Oh wait, no. I couldn't have. I couldn't have sold anyway because I didn't have any day trades. I did not get all my day trades back until Friday. And I don't understand that. No, because I got one back on Monday from last week, and then I used that on Monday, and then I didn't get any of my day trades back until Thursday, and that was both of them. I still have a day trade left because I did day trade Gush today, but like I said, I would have traded um the the ETFs that I follow, which is Drip, JNUG, JDHT, Gush, you guys, the guys, the ones that I usually talk about every week because they do have very consistent horizontal patterns that I am able to identify, but not really able to capitalize on because I'm trading things like AA and TUSK. But all good, all good. Yes, but back to AA. So this one was another mistake, not following my plan. So TUSK was not following the plan because I didn't buy any at the actual support. Um, and AA was not following the plan. Wow, I did not. This is why you stick to your plan, guys. No matter what, if you can have that discipline and stick to your plan, you will go far. But okay, so that's two trades. I didn't stick to my plan. Wow. So possibly the theme here is stick to your crap. Okay, next symbol, next ticker symbol is ticker symbol GUSH. This is the leveraged 3-time oil ETF. This is the bullish one. Drip is its inverse. This is the bearish one. As you can see today, I decided to day trade it because guess what? The horizontal patterns that it always has every week. As you can see here on, I believe this is Wednesday. The 3 to 5% I'm looking for each for day trading these ETFs on a weekly basis. Look, Wednesday it completed about 1.13. Oh wait, no, this is SPSIOP. My bad. Yeah, because I'm like, it covered more than that. Okay, let's go to Gush. As you can see here, I validated the horizontal support at 3660, and the resistance around. Let's see. Let's go back. I'm pretty sure that's 3850. I can't see right now. Hold on, let me back out for you guys. Yes, around 3880. Realistically it was around 3810. But as you can see, I did identify the horizontal pattern. And on Wednesday, if I had my day trades, look at that. I would have day traded that 3%. Thursday, look at that. If I would have day traded that, would have been patient, another 3%. Every week, I figured out something, and I think this is going to be my niche that I can capitalize on the most if I actually stick to my plans and profit off of them. Every week, these leveraged 3 times ETFs, they are consistent in the horizontal patterns that they make on a weekly and or monthly basis. Oh, market is about to close in 4 minutes. Okay, yes, but as you can see, I validated 3660 as support, and today I got in at 37 around here. I was up on the trade, but not as much, but not as much as I want it to be. And as you can see right now, it's making higher highs. I could have stayed in and waited, but I saw that it was breaking resistance. No, that it got rejected here at the EMA, and it started to trend back down, but it never broke below the support. So realistically, I should have at least held this until the end of. No, I shouldn't have held this because it was getting rejected and it hit my stop loss at 3660. I actually stuck to my plan to this one. See, I entered at 37, exited at 3660, and I lost a total of 1.8%. This trade, it wasn't a bad one. The patterns sometimes just don't work out. Like your plan just doesn't work out sometimes. That's a stock market. But you can be prepared for that by setting your stop losses and having some sort of exit plan and not just panicking, just remaining calm the whole time and keeping your emotions in check. But as you can see, I could have sold, but I didn't have enough shares in it for me to cover for it to want me to sell, because I was only gonna, because if I sold around 37.30, I was gonna make like $5. No, I was trying to sell at around 38 for that yummy 3% profit that I'm looking for all the time. So yeah, the problem, what I could have done better on this one is I could have bought at the actual support, at the actual 3660 support that I saw, and I could have, yeah, not done, not, I could have sold it at around 37.30 for 2%, but yeah, there's really not much I could have done on this trade, but just, it just didn't work out, simple as that. I'm not really mad at this one. I'm mad at AA and TUSK because I could have profited off of both of them if I stuck to my plan. So those two were screw ups, but I guess it just didn't work out. But as you can see now, it's kind of working out. So we can probably see a continuation of this pattern or a break on Monday. Now let's go to ticker symbol BBY. This one is another special case like TUSK. On TUSK, I was trying out a new strategy, but on BBY, I played this as a option. Yes, I know. I'm great. No, I'm kidding. I do. Hold on, let me take a sip of water. Yes, I do trade options. I'm starting to get into the process of trading options. Taking it, just taking it step by step. I'm just taking these options step by step. I'm not going all in because I'm still learning. And let me go ahead and tear off this Fibonacci. I have traded BBY before twice, and I have profited. This is a very reputable company. This is Best Buy, obviously. As you can see, the reason why I was interested in this is it broke 78, and I expected this to retrace highs back to the highs of 84, but I wasn't expecting to sell around there. But as soon as I saw the momentum breaking 78, I'm like, I can buy, since it may or may not cover this margin. I think I would want to buy contracts on it. So I went ahead and bought one contract, just one contract, for $124. The price of the contract was $124, and I chose an, oh, there it goes. I chose an expiration date of, I chose an expiration date of September 7th. That was next week. And as you can see, it started trending up right here. But during this time, Trump did the news came out about Trump that Trump may or may not be releasing $2 billion worth of tariffs on China, and the market just took a small dump at the time and started to trend below that. But as you can see, I identified support at 77, and there was previous support at 77.61. So I didn't get cold hands. I just stuck to my plan, and then here comes Friday. I was speaking with one of my colleagues about taking profits because I was up already 40% on one contract. That is the power of options. I was up 40% from one contract from yesterday. They're pretty cool. They're pretty cool if you can. They're not cool. They're very profitable if you understand how to trade them. Now, as you can see, obviously it's going higher throughout the day. I could have held it, but before, when I did trade an option for Bank of America, it was trending up aggressively, and I was up about, I think it was like 130%, and I didn't sell because I had a big head at the time, and I thought, oh wow, this well, based on my technicals, it still had room to go. But then again, that was a weekly option, and they decay faster than the other options that I decided to buy out of date. Like, I could have bought the BBY option for this week, but that would have been more risky on my part. So to take a bit more conservative trade, I bought the next week expiration date. But as you can see, I did sell out with a 25% profit. So hey, this one trade was the one that got me to my 3.4% this week. Just trading one contract, risking $124 for about $34. It was not a bad trade for me. But yeah, that is gonna be it on that one. I succeeded on this one because I understood the pattern, I understood the support and the resistance, and I actually stuck to my plan, and I covered my profits on the uptrend right here that it had. So yeah, this one was a good trade. So overall this week, I need to work on sticking to my plans and again be more patient. And yeah, that's gonna be it for this Sunday Stock Talk. Update on my new segment. It is currently in the works right now, and hopefully I can get it done this week if I don't get sidetracked and if I'm not too busy. But I promise I will try. So that's gonna be it for this Friday recap. Make sure to do your own diligence, and I recommend that every week after you trade, you go over your trades and see what you did right and what you done wrong and what you could have done to succeed in your trade. So yeah, that's gonna be it, you guys. I hope you guys have a wonderful weekend, and I'm out.
Switch it up. I said, okay, dokey, my infatuation, it translating